The latest blow to the embattled buy now, pay later space. Apple is getting into the game. The company announced its new BNPL service at its annual Worldwide Developers Conference earlier this week. Let's see what this means to one of the industry leaders. Joining us now is Affirm founder and CEO Max Levchin. Max, always great to get some time with you. Why aren't you sweating this arrival of Apple?
A couple of good reasons. One, BNPL as a category is so underpenetrated in the US, and you could argue worldwide that there's just a lot of room for growth available to everyone. I think when PayPal announced that they're going to enter the business, everybody was expecting us to sweat. We have yet to have any meaningful reduction in growth because of PayPal's entry to the business. I fully expect Apple will continue promoting the idea of transparent, simple interest, or no interest at all in some cases, products like what we offer. But ultimately, there's just a lot of room for growth for everyone. That said, we are unique in the sense that we offer transactional terms from 6 weeks to 60 months, and the product that they just pronounced is only 6 weeks. So I think we cover just a lot more use cases. Buying a T-shirt with paying over 6 weeks is fine. Buying a bicycle or a couch is really hard, and we are there to meet consumers where they need us for all of those products.
Is one way to beat back Apple to go out and try to get a bank charter? Is that something you're considering?
We primarily think about regulatory frameworks in terms of products. So I don't see bank charter as a requirement in any way to beat back Apple, as you put it. I do think of it as kind of an interesting unlock for some features that only banks are allowed to do. If one day we choose to build those features, then we'll certainly talk about it or think about it. But for the moment, we're great from the regulatory perspective as we are.
Hey, Max, it's Julie here. You've been making the rounds this week, putting out the message that you don't think that this Apple product and service is going to be that big of an obstacle for you. The stock has kept falling anyway. And I wonder if people are not just concerned about competition, but just concerned about the whole space more broadly, especially looking at the economic data we got today, given the outlook for rates going higher and the economy continuing to slow. How are you guys viewing this environment right now?
That's actually, there's one thing that I wish the broad investor public would understand a little bit better. BNPL is correlated in terms of its growth opportunities and its consumer demand with the very part of the curve that we're entering now. And this is sort of a double hit of recession, likely recession anyway, and inflation. You need more spending power. As a consumer, you start really budgeting your money. You care about how long before your next paycheck comes in. And so being able to stretch your money a little bit longer is really, really important. That's what BNPL is all about. And so we're all competing with credit cards as opposed to, I think, each other, primarily speaking. But most importantly, the demand for our products is going up. We're seeing that today. We've seen that for the last 10 years, both as a secular trend towards honest finance. But I feel quite good about, despite the fact that the US consumer is probably in for some pricing pain, we're here to help them get some relief.
There might be more demand for your products in an environment like this, but what about the profitability of those products? And considering how quickly this deterioration seems to be happening in personal balance sheets, consumer balance sheets, are you guys going to be able to be nimble enough to pivot and make sure that that increased demand is going to be profitable demand for you?
That's a great question. I appreciate that. And the short answer is yes. If you look at the structure of the Affirm product, and we've said for 10 years, we're the best underwriter in the industry. We actually manage risk as opposed to kind of throw our hands up and see what happens. So we're quite good at that. But beyond underwriting, we have structured our product in such a way that we are able to react very nimbly, just as you put it. Our weighted average life per loan is just 5 months. So whatever change happens, we are very quick to flush out whatever loans may end up going sour just because they're so short term. And two, unlike credit cards, we don't commit to any long-term approval. Every transaction is underwritten completely separately. And if we feel that the consumer is unable to pay their loan back, we will decline them. And it sucks to get declined in a time when you need the money. But if you're overextended and cannot pay Affirm back, you should be declined. And that's what we are committed to doing.
Wouldn't that have then a direct hit on the total addressable market, if you will, too? If you, in a recessionary environment, have more consumers or have more people that are looking to use your services that are also getting hit on other parts of their spending habits and their credit scores taking a hit as well, doesn't that impact the number of people that you are then able to approve?
It would if the demand did not grow so significantly. So during the last quasi-recession of 2020, we saw demand for some of the commodity products that we power the underwriting for quadruple. So while I'm sure there'll be more folks unable to buy things, unable to afford it, and we would have to not approve them, the number of people who turn to products like BNPL increases much more dramatically. And so generally speaking, I think our growth is expected to be quite strong in a recession. I think our underwriting discipline will remain extremely on point, just like we've always have been. We are structured to make sure that we don't get over our skis or push people getting over their skis. And the demand is just going to continue going up. And so I feel quite good about our ability to navigate this. And I think it's going to be a very tough time for consumers. I think that's certainly true, but we're here to help them and make sure that they're in a good place as we are.
Max, next week your CFO, Michael Linford, who's also been on a bunch of times, is hosting a fireside event with retail investors online, and you're asking for questions to be submitted. A good question that has already been submitted by now, what potentially could be an investor in your company. They want to know, what are the future goals and plans of Affirm? It sounds like they want to be a buyer of your stock, but they're concerned about the longevity of the business. How would you reply to that?
I think the business is in exceptional shape. Just to alleviate any concerns there, we have on the order of $3 billion of cash and equivalents. We are printing exceptional unit economics. We promised the street that our long-term goal would be 4%, proceeded to print 70 basis points over that number last quarter alone. So in terms of the health of the underlying business, we're in great shape. And the growth was still in the between 90 and 100%, depending on which category you look at. And obviously some categories are slowing down from last year, but there's great rotation towards things like travel and experiences. And so overall, the business is doing very, very well. I think a lot of the conversation right now is, well, are you prepared? What happens next? And my answer is, yes, we are. In terms of what we are aiming to do in a longer term, while the current froth is certainly exciting to watch, we primarily spend our time thinking about the future, trying to build products that will take us to the next decade of success. I'm very excited personally about Debit Plus, the card product that we rolled out. It is seeing excellent engagement. At this point, we're on record saying that we just love how it moved the needle on our consumer engagement by essentially an order of magnitude. And we will continue bringing that out to our users and hopefully get new users. Our partnerships with the likes of Shopify and Walmart and Amazon and Target have done really, really well for us. And we have a ton more products we need to bring there. So there's just a great number of financial products that we feel we must bring to the U.S. consumer and beyond. We have plans outside the U.S. as well. We're already in Canada and Australia and looking elsewhere. And so just a lot of growth for the company and feeling quite good about the business, frankly.
Would love to continue the conversation around some of that growth, some of the future products. We got to talk about crypto as well in the future as well. Would love to have you back. Affirm CEO and founder Max Levchin joining us. Thanks so much for the time.